Good morning, everyone, and welcome to the Global Perspective brought to you by Net Group Investments. My name is Anil Jagmohan, Senior Investment Analyst here at Net Group Investments. Joining me today is Anthony Burgess, Managing Partner at Veritas Asset Management. Veritas managed the Net Group Investments Global Equity Fund, a concentrated portfolio of about 25 to 35 stocks, which focuses only on high-quality companies with a strict valuation discipline and a significant emphasis on capital preservation. And good morning, and how are you?
I know you very well. Yourself?
Very well, thank you very much. And thanks for joining us. I do have a couple of questions here for you, so let's just jump straight into it. Is that okay?
Yep, let's go for it.
Okay, brilliant. And so I guess first one is just about your 30% allocation to the healthcare sector. And how would that kind of look from an inflation perspective, please?
Yeah, no, it's a very fair question, particularly in the current climate. I think, if you look back in history, healthcare during inflationary periods has always performed well. In fact, there's a number of academic studies which look at all of I think it's 49 industries going back to 1926. And if you look at how the different asset classes have performed through inflationary periods, the only thing to beat gold is healthcare. And actually, if you think about it, it's not too surprising because with healthcare, you've got inelastic demand in the sense that prices go up, you don't get a corresponding fall in demand. If you need urgent healthcare treatment, it doesn't really matter what the price is. It's not the same, as buying a new washing machine where you can put that spend off. So I think that's the first point. The other is that some of the stocks in this sector do have built-in inflation proofing. If you think of an insurance company, the premiums go up. They pass on the cost to the user, and again, you don't really have much choice if you want to have insurance cover, but to pay. And I think the other point that I would mention is the kind of cost inflation issue that you have with companies looking forward today. If you think of mining, some things people aren't focusing on. If you look at oil, it's doing very well at the moment, and you're generating lots of cash by selling that oil. But you're having to redeploy that cash into renewables, build out the capital structure that's needed for that, employ the right people in an inflationary environment. With a lot of the healthcare sector, yes, there's R&D, but a lot of it's intellectual property that's already been sunk into those companies, and we'll come on to this. Science has progressed, and actually some of it goes down in price over time. So your cost inflation is not quite the same. So that sort of depreciates as you're raising your prices. So there's a number of things that go for healthcare in an inflationary environment. And what I would say, actually, just lastly, is that's not the sole reason that we're owning 30% of the portfolio in healthcare stocks. It's very much driven from the bottom up, and there are a number of other growth trends that are responsible for that high weighting. It's just that it should do well in an inflationary environment.
Okay, thanks, Ant. And just what would you say are some of the enduring trends on a forward-looking basis, please?
Yeah, I think there are a number, but maybe in the interest of time, I'll focus on two. And one of them is scientific advancement that we've seen. A lot's been talked about mapping of the genome. I remember, going back, showing my age when it first happened, and everyone was sort of going on about how fantastic this would be for the development of drugs. And just to put some numbers on it, back in 2007, it cost about $150,000 to map the human genome. Today, that's $600. And the belief is that will reduce to $100 to $200 over the next few years, and it could be as little as the next couple of years. But what's interesting is that COVID has really escalated some of that advancement in the application of science. And a lot of us have become expert in COVID vaccines, but something that we've kept hearing about is messenger RNA vaccines and how successful they have been. But they only came about after COVID. They've been trying to crack that nut for 30 years. I mean, just to give you a little bit of a potted, history, most vaccines, what they do is they use a dead or weakened virus, and that's injected in, and the body will build up its defences to become immune. That's essentially the mechanism by which it's worked, and that whether it's polio or measles. But the problem with that is that it takes time and effort to produce enough of the virus and then to weaken it. And so a lot of scientists thought, well, hang on, why, if we could actually extract a little bit of the genetic material from the virus that makes a protein that the body would recognize, then it could build up a defense that way, and that would be a much easier thing to do. But it was actually quite difficult to do in practice for a whole raft of reasons. But it got cracked during COVID. They developed it within 12 months, and that has massive implications going forward, because you've now got a platform where you can start developing other drugs, and particularly in oncology, cancer treatment looks very exciting over the next decade. I mean, a lot of cancer cells have a protein that healthy cells don't have. So if you can find a way of getting the body to produce that protein and for the body to become, to fight it and become immune against it, then you've got you're on the way to treating some very nasty conditions. But more broadly, as well as accelerating the application, you've got the time to market. There's a sense of urgency. The red tape in regulation has started to reduce. There's a lot of funding involved or available. So it's a very exciting space that is a little bit out on its own in the sense of opportunity. So that would be one. The other major trend, I think, is loosely associated with something that we always talk about, which is sort of aging populations. But if you look at it, it's quite scary that at the moment you've got 12% of the world is age 60 or over. By 2030, that's going to be 16% and over 20% by 2050. And in certain countries, the statistics, worse than that. In America, by 2040, in the 40 years to 2040, the number of 85-year-olds will have quadrupled since the year 2000. And of course, they're the group that need the most care. So what does this mean? Well, two things. One is that the cost of healthcare is going up, because suddenly, once you stop working and you retire, the person paying changes. You've got more governmental payments. People are living longer, and they're living longer at a cost, because running alongside this aging population, you've got lifestyle diseases. We're all sitting looking at phones these days, and the cases of myopia, for example, short-sightedness, are going through the roof. 80% of 20-year-olds in China are now myopic. It'll be 50% of the planet by 2050. And the longer you live, the more likely you are to get age-related eye diseases that start with myopia. So all of this costs a lot of money. And so the trend that we're trying to get behind is effectively value-based healthcare. What you really want to do is invest in companies that are helping to take cost out of the system in some way, rather than just ramping the price of drugs up. So in short, you've got value-based healthcare is one major theme, and then the other one is really companies that are making specific equipment, or the plumbing, if you like, behind the advancements in the next range of therapeutic drugs.
Okay, thanks, Ant. We've got about 5 minutes left, so I'm going to try and squeeze in a few more questions for you. So let's
Sure.
talk stocks now, right? And just, in terms of implementation within the portfolio and how you actually taking advantage of some of the trends that you mentioned. Perhaps we can talk about some of the companies that facilitate the development of drugs first, please.
Yeah, sure. So, I mean, I think The first thing is that we don't particularly like drug companies because they have to reinvent themselves every 10 years. You've got patent cliffs and so on. But in terms of plumbing, that is the interesting bit. So one of the examples of the companies that we have invested in the portfolio is Catalent. And Catalent is what's known as a contract manufacturer. It's very rare for drug companies to produce drugs on their own. They don't really have the time and capability to do that because half the time you're producing a very specific drug for a small part of the population. And so they outsource it. In fact, last year, out of the 160 billion that was spent on manufacturing and developing of drugs, nearly 40% of it was outsourced. So something what Catalent will do is in early stages of an R&D, they will help formulate the drug that goes to clinical trials. If it gets approved, they will then help manufacture it. And then eventually when the drug goes off patent and it goes to a generic company, they'll produce it for the generic company. But they do all sorts of things like, if it's a nasal spray, what's the angle of the spray, what's the right constituents that make up that spray, if it has to be soluble, is it going to be taken in an area where the water is in short supply and therefore you don't, you want it to be easily dissolve, and so on. The COVID vaccines that it produced for a number of the pharmaceutical companies, pre-filled syringes, they were involved in all of that. So as we get that trend that I talked about earlier with messenger RNA advancing the next line of therapeutic drugs, they will be called upon increasingly, and they've got a lot of pricing power in that space. And then maybe just briefly one on an interest of time. An exciting one, Biorad, which is one that we've recently been buying, and it has actually started to perform quite well. Again, they produce a lot of the bio processing machines that companies need. If you're going to produce penicillin from penicillium, the bacteria from which it comes from, you need a machine effectively to do it, which is the bioprocessing, and they're very much in that space. But they're also the pioneer in what's known as droplet digital PCR tests. So, but basically, they can pick out essentially the equivalent of a needle in a haystack when it comes to genetic material. A PCR test, as I'm sure your listeners will know, is simply just trying to detect the genetic material of the virus. And what a digital droplet PCR test can just do that on a massive scale. So one of the things they do is they can pick out whether wastewater from a town has got any tiny bit of genetic material from that virus, which is one of the ways they pick up on new variants, for example. But the applications for this are things in gene therapy, and again, the next line of drugs is very significant. So there are two businesses within that space that are in the portfolio.
Okay, brilliant. Thanks. And that's actually quite fascinating. I guess we have just about a minute left, so I'm going to try and squeeze in one last question. But how
Sure.
about some examples of companies that actually lower the cost of healthcare?
Yeah, okay. So maybe two contrasting ones very briefly. One would be we've got a couple of companies. CVS Health is a company that is helping to take cost out of the system in a number of ways. One, it helps to reduce the price of drugs by producing approved lists, and to go on that list, you have to lower your drugs in order to get onto it, and then they will give you significant market share because of the number of customers that it has. But it's also building out its pharmacy stores into health hubs where you can go and have most of the treatments that you would have at hospital. And as soon as you get it out of the hospital, the cost goes down, but the profitability for CVS goes up. And the last thing that they've been working on is things like AI, artificial intelligence, and preventative medicine. And making sure, if you can step in before somebody develops a very significant condition just based on their family history, for example, that is going to save costs. So they're one company. Another one would be Illumina, which owns a business called Grail. And Grail effectively does diagnostic testing, sort of pre-cancer tests. So here in the UK, they're rolling out a trial at the moment with the NHS for about, I think it's 200,000 people aged 50 and above that are high risk to cancer. and looking at whether their test can pick up one of 50 different types of cancer before it develops. And if this is successful, you can imagine the amount that saves the National Health Service, and how that could be rolled out around the world. And it comes back to what I mentioned earlier about, if the genetic testing goes down to $100, rather than the 600-700 that it costs today, then that becomes more viable as a way of lowering the overall health costs in the future.
And thanks very much. It's amazing how many new things I always learn every single time I chat to you. But thanks for your time. We appreciate all your efforts, and we'll chat again soon.
Look forward to it. Thanks, Neil. All the best.
Thanks. Bye.
Bye.
To everyone joining us on the call today, thanks very much for your time, and we certainly look forward to seeing you again soon. From all of us here at Net Group Investments, best wishes to you and your loved ones. Bye.